Now let's welcome in Tom Lydon, President ETF Trends. Tom, good afternoon to you.
Hey,
Tell us
Nicole.
about ETFs. Obviously, people love ETFs. We've seen some very popular ones. For example, ARK-K is something that you're watching very closely, an innovation ETF, tech related. It's volatile, right? But tell me why people love this one.
Well, it's all about technology. A lot of people have been talking about Cathie Wood and the team at ARK this last year. However, earlier in the year, there was a bit of a correction there. So people thought that it might have lost its luster. Then most recently, we saw the 10-year get back below 1.3%, which was really good for growth stocks. And then on top of that, today, boy, Biden's executive order couldn't have been better for innovative technology. So when you look for companies that might be the next FANG stocks, there are some thematic ETFs out there right across the board that are very innovative. And now with the government getting behind innovation, competition, technology, growth, I think we're going to see more and more money flowing into these thematic strategies, which not only Cathie Wood and the team at ARK have, but they're right across the board. On top of that, it's also important to note, Nicole, we're almost going to hit $1 trillion in new assets this year in ETFs. Last year, it was all about fixed income. This year, it's all about equity.
And that was exactly what I was going to ask you, which is that people have really, first of all, more and more folks became traders during the pandemic, right? Which is very exciting. As you noted, the inflows into ETFs. I mean, this level of, I think you said 3 trillion. Tell me about how monumental and what a milestone that is.
Well, it is. And a couple big themes that we're seeing, obviously, the low cost, the diversification, and the tax efficiency of ETFs. Uh, there's still more money in mutual funds today. However, there's also $5 trillion in money market funds. Eventually, that's going to find a place to go. Probably not in the bond market in the next 2 to 3 years, as rising interest rates are almost toxic for fixed income ETFs and bonds and bond mutual funds in general. But I think what we're going to see is the dominance of the S&P 500 start to wane a bit as these large cap stocks that have a huge weighting in the S&P 500 and the government that's kind of targeting these big companies from a monopoly standpoint. It's also important to know that they're looking for competition in the US, but he's also looking over at China. And one thing Biden said in his infrastructure bill is we got to find ways to compete overseas. So I think we'll expect more of that.
Okay, and turning away from the innovation and technology, I wanted to move to commodities. And I know you have a couple of ETFs that you're watching very closely that investors should consider as well, you believe.
Well, we've heard a lot about inflation, and that's the number one concern for advisors, and they're looking at their client portfolios today. Doesn't matter what the messaging is from the Fed, even though they feel it's under control, most investors don't. And we know from history, we haven't had a big inflationary period, but it can be toxic to your portfolio. It's important to invest in areas like agriculture, like energy, like metals. And unfortunately, gold has been the worst performing commodity in the past year. Invesco has a broad base offering in diversified area of 14 commodities to consider. And then also mentioning gold, gold tends to be a second half player. So if you really see the indication that commodities and inflation is kicking in, watch for money coming back into this gold ETF GLD, which is the largest gold ETF out there. I think there's more room to run in that area.
Right. I mean, a lot of people have been looking to inflation plays or reopening plays. I mean, crypto has been a lot of fun for folks, but gold is a tried and true long-term performer, right?
Well, it is. It's the pillar, but so far in this last move of this year, where we're seeing inflation across the board, you think about areas like food, uh, like energy at the gas pump. We're seeing prices increases across the board. for things that people are actually buying, base metals that are going into production. People really don't need gold during this time, but they will need it in the future in order to diversify. That's why it's kind of considered one of those second half players. There's actually been
Right.
$8 billion that's come out of GLD so far this year, and commodity flows are actually flat. So you have to look at your portfolio. If you don't have an allocation to commodities, it's something to consider to diversify.
Yeah, absolutely. And of course, as we have infrastructure and all kinds of metals, and talked about for using that as well. Tom, it's always great to have you on the show. Thank you, Tom Lydon,
Thanks,
President
Nicole.
ETF Trends. Thanks, Tom.